Good day, everyone, and welcome to our webinar for July 2023. We begin, as always, in America, where things have been happening a little. And I'd like to just draw your attention to the chart of the S&P 500, which should be on your screen at this stage. And you can see here that the S&P 500 is definitely in a bull trend now. I've drawn in channel lines here to help you see that bull trend, an upper and lower channel line. You can see the low that it made on the 12th of October 2022 over here, and it's been rising ever since. Even the 300-day moving average, the simple moving average of 300 days, has turned and is starting to move up now. So that is possibly one of the most conservative measures of whether we are in a bull trend or not. So what is causing all this excitement? Well, most recently, the US inflation figures for May came out and they were much better than expected. Core personal consumption expenditure was 4.6%. This is the Fed's preferred measure of inflation, and it is coming down, but very slowly. And of course, it's still very far away from the Fed's goal of 2%. But it's down enough to make the market happy. At the last MPC meeting, the Fed paused its interest rate cycle, so it kept rates unchanged. But it also said that there will be 2 more 25 basis point hikes later in the year. However, the market decided that that wasn't particularly important. It priced in an 87% probability of a 25 basis point hike at the July Monetary Policy Committee meeting, but it pushed the index, the S&P 500, higher. Investors do not seem to be concerned about an impending recession in the American economy. And if we look at that economy, we can see that the economy is showing some signs of slowing down. Consumer spending in May was 0.1%, below expectations of 0.2%, and well below April's 0.6%. But non-farm payrolls increased by 339,000. That's the highest level in 4 months, and hardly an indication of an economy that is slowing down. The rate hikes do not appear to have impacted much on the profits of S&P 500 companies. For example, Tesla has just reported that in 2022, it made a profit after tax and everything of 12.6 billion rand. Billion dollars, with a 16% operating margin. That's pretty impressive. And it's double what it made in 2021. And this massive profit allows it to cut its prices and so boost its sales even further. The level of interest rates is definitely not much of a concern to Tesla, at least not yet. That will only become a concern when it starts to impact on customers' abilities to pay for their motor vehicles. Tesla's sales in 2022 were 51% higher than in 2021, despite the rising interest rates. US companies are still employing more people, and that means that they are growing. The Fed says that they still have not done enough to control inflation. And this brings me to a very important point which I've raised previously. It is well known in America and frequently said that the Fed will keep raising rates until something breaks. So far, nothing of importance has broken. But the effect is cumulative. The effect of rising interest rates is cumulative. The longer rates are kept at high levels, the more likely it is that something will break, perhaps in the housing market, perhaps among the banks, and perhaps in the motor industry. What is very interesting is that the yield curve on United States bonds is still showing a strong inversion. I've put this chart in the notes for you to look at. This is one of the most reliable indicators of an impending recession. It shows that the gap between the 2-year and the 10-year US T-bills became inverted in July of 2022 and has remained there despite all the bullishness in the market. And that shows that the US economy will enter a recession later this year or early next year. Clearly, the Fed is not going to pivot on rates anytime soon. That much is clear. So technically, we are in a bull trend. Investors are too optimistic as far as I'm concerned. The profits of S&P 500 companies that they are buying will begin to fall. Tesla is doing well, but other US motor manufacturers are not. For example, General Motors made a profit of only $9.9 billion in 2022 off sales of $156.7 billion. And they did that with a margin of 6.3%. You can see the difference between this and Tesla. With double Tesla's sales, it made 20% less profit. General Motors' profits are being squeezed between rising interest rates and declining sales. Soon, we believe many companies in the United States will be in the same situation. So that's what I have to say about America and the S&P 500 as it stands right now. Let us turn our attention to Ukraine, where there have been some developments. The short-lived mutiny by Prigozhin and his Wagner group came to a sudden and abrupt end. The rebellion was apparently gaining ground rapidly, moving towards Moscow, and then suddenly there was a deal, apparently brokered by the Belarus President Lukashenko. In terms of the deal, Prigozhin moves to Belarus, and his fighters join the Russian army. We were, and still are, very skeptical about this deal, because the day before the deal was made, Prigozhin and Putin were very aggressive towards each other, and then suddenly their differences miraculously disappeared. Prigozhin, of course, is known to be very protective of his troops. And then now suddenly he is happy for them to be integrated into the Russian army? I don't think so. And of course, Prigozhin and his troops get a full amnesty and he goes to Belarus. Nothing is said about what he will do there. And of course, Prigozhin is not exactly the type to retire peacefully in the countryside. Prigozhin has been Putin's most effective commander against Ukraine. And now suddenly he's being put out to pasture. It's well known that Lukashenko was not getting on well with Putin. He's basically not hard enough on his people. He allows demonstrations and disobedience, which is not good for an autocrat. Also, of course, his health has been very much in question recently. We believe it is likely that Putin offered Prigozhin control of Belarus. And if you think about it, that would be very attractive for Prigozhin and his stateless mercenary army. The condition would be, obviously, that if he takes over Belarus, he must train the Belarus army and then probably open a northern front against Ukraine as soon as possible. Maybe we are wrong. Maybe the mutiny just shows that Putin really is in trouble and his control of Russia is teetering on the brink. That has been what the media and the experts have been saying. But Putin is known to be a very good strategist, and this may just be what they call a sleight of hand. He certainly got the media and the Western experts believing the story of this very short-lived mutiny. Prigozhin, of course, is very popular with the Russian people because he's seen as being a winner. He's very forthright in what he says, and he is not scared of Putin. He has also been moderately successful, at least, in the war. We believe that Putin needs him and has found a way to motivate him by offering him a country. Putin appointed Lukashenko as president in Belarus. He can appoint Prigozhin if he takes the mind to do that. So, I'm just drawing attention to something It might be pure speculation. It is pure speculation, but it just might be right. I just don't see Putin giving up his best commander without any sort of noticeable change in the way things are done. I think that this whole mutiny was staged by Putin in order to deceive the West and the Ukrainians. And quite probably it looks like he is being successful there. All right, let us turn our attention to the South African economy. The consumer price index dropped sharply in May to 6.3% from April's 6.8%. That's quite a substantial drop, 0.5%. But it still, of course, remained outside the target range of 3 to 6%. Core inflation, which of course excludes food and energy, was 5.2%, slightly down. Load shedding has increased inflation in the short term. Businesses have had to put prices up in order to pay for installing solar power. Rising interest rates tend to curb inflation by reducing consumer spending. But at the same time, Eskom has pushed up its cost of electricity by 18.65%, and that will certainly increase prices. Gross domestic product in the first quarter was up 0.4%, just 0.4%. That was mostly expected, and that mainly came from food and construction. Mining production was up a measly 0.9%, and there was a bit of a recovery in tourism, especially in the Western Cape. Agriculture has been damaged by persistent load shedding. The energy availability factor at Eskom was at an average of 53.2%, and that impacted most sectors of the economy, some more than others. The growth in 2022 was in at 1.9%, obviously substantially down from 2021's 4.7%, but that of course was a bounce-back recovery from the COVID that we experienced in 2020. Growth may pick up if load shedding can be kept down. Nedbank is of the opinion that GDP growth this year will be just about 0.1%. So there's a fairly well-known bank saying that just 0.1% this year. Turning to some of the companies, Motus CEO said that the cost of running a car this year in May 2023 was 48% higher than it was in 2019. Vehicle owners paid 3,775 Rand a month on average more than they did in 2019. This has resulted in people buying downwards, in other words, swapping out expensive vehicles for cheaper vehicles. The cost of motoring has a direct impact on consumer spending. At another company, African Bank, in its financials for the 6 months to the 31st of March 2023, it recorded impairments of 2.2 billion Rand. That's obviously a provision. And its credit loss ratio jumped from 4.8% to 11%. This shows that lower income groups, who are most of the customers at African Bank, are really taking some strain. Customers are not being able to make repayments on time, and obviously that has resulted in the situation. Manufacturing production was up in April, year on year, 3.4%. Quite a surprise, really. But it shows that manufacturers are moving away from Eskom quickly. Retail sales were down 1.6% in April, and that was the fifth monthly decline, and that obviously reflects consumer spending. Volumes in the retail sector were also down by 1.1% as consumers cut back. And we saw that last month in the BankServe take-home pay figures, which show that consumers have less take-home pay. Looking a little bit further abroad, the loss-making state-owned enterprises in South Africa are a massive drag on the South African economy. Mostly they contribute little or nothing to the welfare of South Africans. Since 2014, the state-owned enterprises have received 330 billion Rand in subsidies. Of this, about 180 billion went to Eskom, and of course we all know that the government has taken over 254 billion of Eskom's debt. And 50 billion went to SAA, which was, in my opinion, a complete waste of money. Now, the Post Office is looking for 3.8 billion from the government, on top of the 2.4 billion which it got in the February budget earlier this year, in order to stay alive. They'd probably get it. But that shows the incredible waste that these SOEs are in this economy. President Ramaphosa's partnership with business leaders is quite interesting. He's obviously trying to overcome the country's power crisis, and it might well work, provided it does not get bogged down in ideology or destroyed by the vested interests of corrupt officials. Ramaphosa is mobilizing the country's wealth of skill and leadership, but he may well find that he's criticized for selling out to white minority capital. Okay, now I'd just like to look at the rand. Get the chart on the screen here. Okay, this is the rand, and you can see. Expand the chart here a little bit. You can see the worst level on the rand was this day here, when it reached 1976 against the US dollar. That was the 31st of May. And this is the impact of the increased load shedding since last year. And then here you can see a period of rapid strengthening. Okay, and that rapid strengthening, in our opinion, was associated with a shift towards risk on among overseas investors, mainly as a result of the rising S&P 500. And you can see more recently the trend has been a weakening trend, and that may well presage a fall on the S&P 500. It may well presage a period of time when we move towards a risk-off sentiment in overseas investors. So I just wanted to draw your attention to those aspects, and once again to the relationship between the rand and the S&P 500, which we think is important. All right, now I'd like to spend a little bit of time talking about Eskom and developments there. Of course, the first major development to Eskom was the 7% 3-year wage deal, which was negotiated, and which will obviously add substantially to Eskom's cost base. The company already has debt of well over $400 billion, and as we mentioned just now, the government has agreed to pick up $254 billion of that. And of course, this deal means that the Eskom has, in effect, given in to the unions. And that is as a result of yet another illegal strike by the unions. And they got their way, but at a cost. In a sense, the deal is another nail in Eskom's coffin. The unions are hastening the end of the goose which lays the golden eggs. They seem oblivious to the fact that if Eskom dies, and when it dies, most of them will become unemployed. All right, a survey by Eskom and the renewable associations shows that 66 gigabytes of renewable energy power is in the process of being built. Many of the installations would only start to produce power after 2026. But if the survey is correct, it's very interesting, because first of all, it means that Eskom will definitely become irrelevant. And secondly, its transmission company, which it's possibly pinning its hopes on, is probably not going to be as successful as has been thought, because renewables are usually already distributed. In other words, if you put in a solar system at your house, you don't need to connect to the grid. You're off the grid. You create your power in the same place where you use it. And so the idea of having, a few major power stations where the power is then distributed all over the country is really outdated, and we'll talk more about that later. ABSA produced a survey of sentiment in the manufacturing sector, and what was interesting for me in that survey was that the hours worked per worker dropped from 32 to just 20 per employee, and that is due to load shedding. Many factories have had to close for extended periods. Fewer hours are worked, and that means less wages. it also means less profits. Manufacturing is now operating well below its capacity in this country. By contrast, the mining sector saw production up 2.3% in April. Mining uses an awful lot of electricity, but most of those mines have already converted to renewables or are in the process of doing so. So the load shedding that started late last year and has gone on into this year has not really impacted on the mining sector to the same degree. Gold production year on year was up 27.4%. Coal was up 12.5%, but platinum group metals were down 4.6%, and iron ore production was down 3.6%. Mining, of course, is a major contributor to gross domestic product, but it is very volatile because its product prices are dependent on international markets, which are substantially outside of the control of the mines. On the 22nd of June 2023, the Business Day reported that Robert McBride was going to be appointed to Eskom, and his job will be to go after the criminal syndicates which are operating there. McBride has a reputation for being a pretty effective crime fighter. And of course his success, as always, will depend on what support he gets. Like De Ruyter, he will probably face a howl of outrage from those he is going after. The Minister of Electricity, Ramakopa, says that it will cost 210 billion rand to upgrade Eskom's transmission grid. This will no doubt be on top of Eskom's 400 billion plus existing debt, but renewables are usually produced close to where they are consumed, as I pointed out just now. So there's far less need for distribution. We think that the distribution company is based on an outdated concept. All right, I've got a few general points here that I want to make. During the month, we had 10 municipal elections, which were held on the 28th of June 2023. That's last Wednesday. About 100,000 votes were cast in all of those 10 municipal elections. Of those 100,000 votes, the DA got about 33%, the ANC about 26.5%, and the EFF got a miserable 15.7%. The ANC also lost a key stronghold seat in Johannesburg, and the EFF's performance was far worse than expected. Of course, these are just municipal elections. They don't necessarily indicate what will happen at next year's general election, but it's an interesting outcome. It's pretty much accepted these days that the ANC will probably lose their majority in Parliament next year at the election. What is uncertain is who they will make an alliance with. If they come to an agreement with the DA, it will be positive for South Africa. The DA will probably want the Ministry of Minerals and Energy, and that can only be good for us. Right, now I'd just like to talk to you a little bit about the NHI, which has been passed now through Parliament due to the ANC's thin majority. Obviously, this piece of legislation is both impractical and unaffordable. It is a populist idea, probably passed through by the ANC in order to try and enhance their performance at next year's election. It reduces medical schemes to providing only gap cover, and it will probably make many of them unprofitable. Could result in a substantial exodus of qualified doctors from this country, if it's implemented, but we don't think it will be. The biggest concern is that the NHI will turn into another corrupt and very expensive government-run behemoth like Eskom or Transnet. The past 30 years of ANC rule have shown that they cannot run big organizations efficiently. They should accept that point. South Africa's neutral stance in the war on Ukraine is going to cause problems for this country. It also has very few, if any, benefits for the country. Europe and America are by far our largest trading partners. Russia is insignificant. Its economy is about the size of the state of Texas. Ramaphosa's ambitions to be the peacemaker are, in our view, ill-funded and even absurd. The fact that we have not condemned Russia's invasion is a black mark on this country. It will affect relations with our major trading partners for years to come, in our view. And of course, a key element of that is the African Growth and Opportunity Act in America. South Africa is one of 35 countries which benefit from that act. It gives us preferred trading status with America. Our membership is currently up for review, and we have sent our esteemed Minister of Trade, Ibrahim Patel, over there to argue our case for remaining included in AGOA, African Growth and Opportunity Act. The Act requires that the beneficiaries of that Act do not harm America or its allies, and already there is bipartisan support in America for our removal as a beneficiary. The economic impact of losing our status in AGOA will be substantial. And for what? For what are we doing this for? Because of our relationship with the BRICS countries? Doesn't seem logical to me. Okay, now our Minister of Water and Sanitation is one Senzo Mqunu, and he has produced some draft regulations. In terms of these regulations, farmers and commercial forestry businesses must be between 25% and 75% black-owned if they are to keep their water licenses. This is an extremely foolish and racist idea. It will endanger food production in this country severely. It will reduce the value of farms, and the value of farms is used as collateral for agricultural loans. So it could result in all sorts of chaos in the agricultural industry. Apparently, no consideration has been given to the impact of these regulations. And remember, it is this minister who is responsible for the outbreak of cholera that recently occurred in our country due to impure water supplies. Okay, now I'd like to just talk about something that happened. I'm going to talk a bit about companies now, and particularly I want to talk about transaction capital. So I'm just going to switch to that chart. And the reason I want to talk about this is because it exemplifies a type of opportunity that comes along once in a while. Okay, there on your screen is the chart. You know, the difference between a professional investor and an ordinary person or a beginner in the market is that a professional investor is a person who makes their living by trading on the JSE or by investing in the JSE. They're not an institutional fund manager. The fund manager is a different thing. He's a person who has a job and he manages other people's money, not his own. A professional investor only manages his own money. There are a few in South Africa, not very many, professional investors. But the main difference between a professional investor and a beginner in the market is that a professional gets excited when a share is going up. A professional gets excited when a share is going down. Beginners get excited when a share is going up. Just think about that for a moment. What kind of share would excite you? One that is rising sharply. Usually that is the case. But professionals get very excited about shares which are falling, especially if they are high-quality shares. When a high-quality share falls dramatically, it usually presents an opportunity to make money. Of course, high-quality shares very seldom go bust. That's the point. So if they fall, there's usually some calamity, you know, like the listeriosis calamity or outbreak of listeriosis, how it impacted on Tiger. There's a calamity, but it's a high-quality company with a lot of assets and usually very good management, and normally it will recover from that situation. So if you think that the share is going to recover from its calamity, then the only question that remains is, when will the share price turn? Because it must, sooner or later, turn. Of course, high-quality shares seldom go bust, very seldom, because they already have, as I said, a substantial balance sheet and usually very good management. There are exceptions. One recent exception, of course, is Steinhoff, which is probably never going to recover, well, never will recover in my opinion, and I've always said that, because it committed a fraud on shareholders and it is facing massive civil action for that fraud. But when you see one of these shares collapse like this, the first thing you've got to ask yourself is, are they going to liquidation? Because if they're going into liquidation, then you obviously don't want to be involved. But if they're not going into liquidation, then at some point the share will bounce back. It will certainly recover. Buying this type of share is one of the easiest ways to make money on the JSE. So now let's look at this chart of transaction capital. You can see here that on the 28th of April 22, it made its record high at 52.21 rand. There it is. And then it started to fall. If you had a stop-loss strategy, a 20% stop-loss strategy, you would have got out at 40 Rand on the 8th of June. And for a while, it sort of held on to that level, and then suddenly it collapsed because of the financial results on the 10th of May. We published an article shortly after that on the 13th of May, in which we said that the best way to deal with this situation was to apply a 65-day exponentially smooth moving average. There you can see it. And since we published that article, the share has fallen a further 26% to this low point. Since then, it has risen quite sharply, okay? And now you can see it's going up again. But it's still well below the 65-day exponentially smooth moving average. So our advice to you is when a high-quality share, like Transaction Capital, falls as steeply as this, put on a 65-day E and wait for an upside break. You can see that this upward move here is far away from that 65-day E. And we've had other upside breaks. There was one here, and there was one over here, as you can see. Neither of them came anywhere near the 65-day E moving average. But this is a way that as a private investor, you can make money in the share market relatively easily. You find a high-quality share which is out of favor for some reason. Usually there's a calamity or some big problem. And then, of course, the market collapses the share, and then slowly the management gets on top of the situation, and eventually the share price turns, and you can pick up the share normally for an absolute song. I mean, you know, the 65-day E on Transaction Capital is currently at 10 Rand, around 10 Rand. So it's fallen from 50 Rand to 10 Rand. It's 20%. Even if the share price jumped to above 10 Rand today, you'd still be getting the share at 20% of what people were paying for it in just April last year, right? So this is a very good way and one of the lowest risk ways to make money in the share market. Okay, then I just want to draw your attention to two other shares today. The first one is Storage. Storage is it's the only real estate investment trust on the JSE which makes its money from storing people's goods, from offering them a self-storage facility. Okay, here you can see the chart. There's the impact of COVID. It's been in a steady upward trend, and then it suddenly got into a bear trend over here, a downward trend. This company has 60% of its business in South Africa, 40% in the UK. It's trying to grow its UK business, and it's becoming more and more of a rand hedge. It obviously has a very stable income because it's got thousands of people who are renting self-storage rooms from it. So its income is very, very reliable. In its results for the year to the 31st of March 2023, rentals were up 17.3%. One thing I particularly like about this share is its loan to value. In other words, its debt level is only 30.8%. And it's very good at making acquisitions. At the moment, it's got a net asset value of 15 Rand, and the share is trading for 12 Rand 40. So you can buy 15 Rands worth of property, income-producing property, for 12 Rand 40. That would seem to me to be something of a no-brainer. The other company I want to just talk about quickly, the last one, is Argent. Argent is a manufacturer of steel and related products, including brands which you know well, like Expander and Jetmaster. It's been in a strong upward trend for some time now. It makes a lot of aluminium products like ladders. In fact, it's Hulaman's largest distributor of aluminium products. In its results for the year to the 31st of March 2023, revenue was up 12.8% and headline earnings per share were up 21.3%. This company is engaged in a really aggressive share buyback program. In fact, it's reduced the number of shares it has in issue by 1/3 since 2016. And now it's trading on a PE of just 3.96 and a dividend yield of 4.75%. That looks very good value to me. It looks like good value. Okay, folks, well, thank you very much for your attention. I hope that you got something of value out of today's talk. Remember, the notes are on the website for you to look at, and there's obviously a great deal more detail there than I've been able to give in this webinar. Otherwise, I'll talk to you again in August, on the first Wednesday of August, and thank you for listening to me.